I'd like to just add a couple of sort of things around where I think things are going. Big data, we talk about big data an awful lot, or data, and this is a huge sort of thing for us at JLL, is to be able, through our 200 offices around the world, to be able to collect that data, analyze it, make sure it's very accurate, and then use that data to help our clients make their investment decisions, whether it's local or international. So I think as we move into the data era even more, I think local knowledge, which Professor Ling has sort of brought into his analysis, is going to be harder and harder as more and more of that data is available to all, i.e. available to those that are located in the markets where they have concentration, and also to investors from outside. So we might see some changes as we move through this era of more data. The other thing I think to be important when looking at sort of returns is the correlations that you might have. When one market is down, another market might be up. And I think as a fund manager, whatever sector you're in, whether it's real estate or not, you are constantly looking at that. The interesting part about Professor Ling's study is it was concentrated in the United States of America, which is one economy that, in my sort of understanding, it typically sort of moves either up or down as a country. And if I was looking at the study and it was more international, then you could look at the economic performances, the demographic drivers, etc., which would have some impact on that. Because clearly, if you sort of look at a country like China over the last couple of decades, and to Alan's point around supply and demand, what's happened in China is you just had huge economic growth, massive urbanization, which has driven sort of demand off the Richter scale, and supply has just been chasing it for that demand for almost 2 decades, which has meant that the returns have been very good relative to maybe the more established, mature economies. So in that case, you certainly, as an investor, would say there's some opportunities that are greater than in my home market, and therefore it doesn't pay to have too much concentration in my home market if I'm in, I think you said, was it Baltimore, versus Shanghai. And I would have thought in any imagination, if I was left with a choice of having $100 in Baltimore over the last 20 years or Shanghai, I would have gone for Shanghai any day of the week, because it just feels as though things are happening more there. So I think that's obviously something to have out there. I've got a real example though where here in Singapore a number of years ago where we were involved in something where we took a property to the market for sale, and that's often what we do. And we say to our clients who are the sellers, we say, look, we'll expose it to a global audience of investors for you, in the hope that that will enable you to get the best possible price. And in doing that, there's 2 things that can happen. One, you can find that sometimes overseas investors see something before the local investors do. Because sometimes local investors are very trapped in what's happened in the past, whether it's benchmarks around pricing, rents, capital values, yields, etc., that all impact property prices. So they're trapped in the past. They say to themselves, but $2,000 a square foot has never been broken before, or rents have never been over $8 a square foot. And therefore, in that being trapped slightly, their view might be limited, versus a overseas investor that might come in and say, I can see something big that's going to happen in this market, and that is the opportunity. And that possibly, Alan touched on that when he was talking about the macro part as well as the micro, and also was talking about it on global trends. So e-commerce is a great one. For sure, or even low interest rates. When we started to see the beginning of low interest rates, we knew that that was eventually going to go around the world, even though it started in the US, etc. And we know what low interest rates do for enhancing returns in real estate. So that was a sort of global trend, as e-commerce is now. So sometimes the local knowledge, whilst it can give you some advantages and great advantages. It sometimes hinders you in terms of what somebody that can look in from outside can see. And then the other example I just wanted to probably finish on was that, you know, sometimes knowing whether you should be on the right side or the left side of the street, or the north or the south side of a district, means an awful lot in terms of potential performance of that asset. And locals certainly know, you know, where locals shop or where locals would prefer to work. And sometimes we found that when we've taken assets out for sale overseas, sometimes overseas investors have missed those local nuances and ended up maybe sort of overvaluing a property on the wrong side of the street. And local investors will know that, and that's the opposite of what I said. So